What if you only traded this one setup? So today what we're going to do, traders, is walk through one of the simple setups that I use, and that's a sell high setup. And we're going to make it really simple so that everybody can follow the same rules. There won't be anything that's esoteric. And the whole point of that is to demonstrate the importance of building your playbook. I've mentioned before, I look for the pump and dump type setups, but today what we're going to do is we're going to focus on pump and dumps that are triggered by hitting a previous day's high of day. So again, no gray area. It's going to be strictly in our timing window. We're going to be looking for a 1 hour trade max and be done in our 1 hour. And we're going to look at what happened this week in terms of what the major pairs, oil, gold, and NASDAQ, offered us with this particular type of setup. So again, just to review quickly, the phase one is the markup phase. We're not even going to be paying attention to any of this. We're just going to be looking at pairs that have triggered an alert at a previous day's high of day. But again, understanding the psychology and the mechanism behind this is taking traders higher, trend traders, traders chasing whatever smaller time frames, 15-minute, 5-minute, 1 minute, whatever they may be, hourly. They hit the previous day's high of day. It triggers breakout traders. It may be hitting stops from a previous session's short trade, whatever that may be, but it triggers other time frame traders, end of day, 4 hour, 1 hour, etc. into the markets, especially at the beginnings of our 12 candle window. Again, those are the beginnings of the Asia, London, and New York sessions, or within that time window itself. And then, of course, the reversal, which if we have trap volume and we have a creeping trend, we're looking for a vertical fast move that moves quickly from point A to B, and we'll have a fixed stop and a fixed profit target. And again, the point of the video is to demonstrate how simple you can make things. It's entirely your choice. This is the decision that I've made with my trading. I make it as simple as possible because I can reproduce that. I've had people ask me, I had a question this morning, is this your only source of income? Trading is my only source of income. It's a business, so I have to treat it like a business. I have to have setups that are high possibility / high probability. I'm looking for low stress. I'm looking for trades that are going to move quickly. I'm looking for trades that I can be off the screen with. All those little things, because I know that I'm the variable that can interfere with that trading business being consistently profitable and successful over time. So again, I'm demonstrating this to point out you can make it as difficult or as hard as you want. I've had traders ask me to give them my analysis for the week on the weekend, what I think a pair is going to do. I don't do any of that stuff. I have setups that I go to the market to trade. And again, when I'm on the screen and I'm trading in live time, I'm not interested in providing entertainment or trying to walk somebody through. I'm there to execute and make money. And for traders who are serious about making money, they want to learn how to trade. They're not interested in watching. If you think that you'll learn by watching, you're mistaken. You need to be able to pull the trigger yourself, and you need to have setups that you are completely confident in and confident in your ability to execute. So again, the pump and dump. That's one of my go-to setups because it happens all over the place. The dump and pump is the reverse. Today we're going to just purely focus on trade setups that trigger from the previous day's high of day. Learn the difference between a poor quality one and a best trade setup. But we're going to look at all of them because we're not going to filter them out. We're going to assume that people are just going to hit them because, they think if it hits the previous high of day, Stacey said that's a trade setup, and they're going to execute. I'm not saying anytime it hits the previous day's high of day, it is a trade setup. We are looking specifically for the pump and dump setup. But today we're going to put in some hard rules that we'll stick to, and we'll go and look at what each day offered on the major pairs, the euro-yen and the pound-yen crosses, as well as gold, oil, and NASDAQ. So again, it's a creeping trend that goes vertical to the previous day's high of day. It triggers breakout traders. It'll hit stops. It'll trap trend chasers. It'll have trap volume in there as well from the trend chasers earlier in the trend. And then, of course, an anchor point where the move began, a pin hammer or a strong bull candle where the pump and dump began. And then just emphasizing again the importance of building your playbook with best trade setups and going to the screen to look for the best the pairs that give you the best setups, not going there to analyze or forecast or chase a move or anything else, looking to execute best trade setups and mastering those, limiting your screen time, managing your risk, and locking in profits. Reproducible and scalable, that's the whole point. It's my business. I want to grow my trading business, and I need to trade the instruments that are going to offer me these recurring opportunities with my best trade setups. Now, just to review the timing window: Asia, 8 to 11 p.m. Europe and London, 2 to 5 a.m. New York, 8 to 11 a.m. We'll bring this back, and again, that is New York time. The trigger is when a previous day's high of day has been traded into. So if you need to set alerts, whatever you need to do, you don't need to sit at the screen. You can, again, if we're sticking to this timing window, if you're coming for Asia, you might have alerts set, or you may just have your chart set up to scroll through. There's going to be ones you're going to just knock out right away. There's going to be ones that you'll be able to visually see this happening. Like if you're following one or two pairs, or if you've narrowed that down, or if you've set alerts on your platform, the alert will go off. You will have plenty of time. We're talking probably a minimum of 15 minutes, which if you're there at the screen for a limited controlled amount of trading time, is plenty of time for you to go and observe, to watch what you're looking for. Remember, I always emphasize, and I say this to traders over and over again, I have no idea where these markets are going. But when they do get to the high or the low, it's about how price behaves. I don't know what it's going to do, but I have a thesis, and based on how the pattern of the trend is and how the price action sets up, I could be looking at a opportunity for a reversal pattern. Today we're focusing purely on the reversal pattern at the previous high of day. M's, triple tops, V tops, previous day's highs that we will enter in on an engulfment or pin hammer with inside after these are locked in, after it's locked in. So just because it goes to the previous day's high doesn't mean we're just getting in. We want to see an M, double top, triple top, V top, previous day's high broken, and the engulfment or pin hammer will be inside of this top formation. Maximum stop loss on this is going to be 15 pips on the major pairs, and the pound yen, euro yen, and on gold, Nasdaq, and oil, we'll say 20 pips. There's more volatility on those pairs, but we are going to say that is our max stop loss. We're going to set a profit target for today of a fixed 25 pips. Obviously, on some of these pairs, there's going to be 50, 75, 100 pips plus, depending on which session this occurs in. If it's the high of the week, at the high of the month, all of those sort of things, but in the weekly template. But purely for having all of our variables controlled today, we're going to say we're going to take a profit target of 25 pips. We're going to go to break even once a swing low is broken or a 15 pips of profit has been reached. So what that means is, regardless of the time in the trade or anything else, once a swing low is broken or 15 pips of profit has been achieved, we will go to break even. We will exit the trade after 1 hour if the target has not been hit, or if it has hit a session swing low, 3-push pattern. So obviously if it's pushing 3 pushes into a low and we're only up 10, 12, 13 pips, we will exit that trade, because these trades should be going vertical to their target, hence our previous slide on the pump and dump. So we've defined all of our variables. We're going to have a max stop loss. We know where we're getting in. We know what our trigger is. We know what our profit target is. We know when we're going to break even, and we know when we will exit the trade based on a time expiry. Let's take a look at the charts. On Monday, we had the pound yen trigger previous day's high. Now again, I'm just using this chart to demonstrate where the violation occurred. We will go to our 12 candle window, and we can see that this occurred in our 12 candle window at the high of the day, previous day's high. I'm going to go through these reasonably quickly. I'm going to demonstrate what we've just gone through in our rules. You can replay this and then walk through your own charts, but in the effort of not dragging this video too long, we're going to go through and just show the pairs, all the pairs. I've been through all the pairs, the ones that triggered the previous day's high, and we'll look at the timings and the session and then the trade. This particular trade, so again, we have our triple top, 1 push, 2 push, 3 pushes. We're going to take even the poorest quality entry. We can say that this trade was entered into anywhere. Believe we can take this bear candle. We can say that we've got a poorly executing trader trading these. This trade was entered into at 15. Obviously, it hit its 25 pip target. So we'll just walk over here and we'll put GY 25 pips, and we'll go to our next chart. If we take a look at the Swiss franc, obviously we would have had an alert go off, and we go to our 12 candle window. We can see that this happened just prior to the US session. Okay, so again, this previous day's high of day is triggered on a 3-push pattern: 1 push, 2 push, 3 pushes, an engulfment of the high. And again, we can take a trade, we can take a fill price anywhere. We'll just say that this trader got short on the bear candle. Again, we want to see volume trapped up high. We've got our classic pump and dump pattern. Go back and watch the first part of this video. Pump and dump pattern into the previous day's high. 3 pushes, engulfments. We have an anchor point from where the vertical move began. So you'll start to spot these little pins, these little areas. Again, I want you to go back and review these. And then, of course, we have our 25 pip target. We have a low taken out. The market comes back, rolls over. Traders would not have been stopped out at break even because we do not have a swing low until this market rolls over in the session. These lows, that is not what I considered a swing low. This trade has moved exactly how it's supposed to. This gives us our swing low. We hit our 25 pip target. We're out of the trade. So we go back to our spreadsheet. We can just say USD Chief 25. Now I'm going to demonstrate also just the difference. We see the oil broke through the previous day's high. And again, this is a different sort of pump and dump. Obviously, we can see that the pump and dump occurred later. We're not even going to look at this because although it was a pump and dump and a great trade opportunity, and it did occur in our 12 candle window in our US session, I'm just going to leave it out because this is probably a bit beyond this current video, but also just demonstrating that the market, the difference in a pattern, a normal pattern where we just see that vertical move to the previous day's high for the reversal occurring right at the beginning of a session or into a session at the previous day's high, as opposed to a breakout and a high of day reversal stop hunt on trap volume up high. Again, just visually spotting where the consolidations are and understanding how this trade can still be a pump and dump and the timing and everything else. There's a gap back to where the previous day's high can now act as support. As we saw on the pound yen, the vertical move into the previous day's high, re-pushing back into the high, re-pushing back into the high, and the collapse back down. Just before we do that, we'll just again quickly review this. We see the market had not triggered the previous day's high. I'm not going to walk through any of the price action. We're just going to see the market went vertical. It's hit the previous day's high. We've had the 3-push pattern, and then our sell set up for the stop hunt or the vertical move back down. This is just one variation of this type of setup. Also looking at the Aussie dollar on Tuesday, Monday, and coming back and understanding that the difference between a trend setup and a pump and dump. So we see that the previous day's high is broken on a vertical move. That is different than a pump and dump. So again, important to understand with these setups to be able to recognize the difference of a trend trade, an ascending triangle squeeze into a peak formation blowout versus a pump and dump setup into the previous day's high or low. If we go to Tuesday, we see the British pound broke out early in the session. If we go to our again 12 candle window, we can see that this market broke through the previous day's high at the open of Europe. Now, again, I'm not going to say this is an ideal setup, but we're going to execute the trade regardless because I know that there will be traders as they're learning are going to be hitting trades like this, and I'm not saying this is your trade setup, but what I am pointing out is how this can be managed and still profitable even in a poor quality setup. We have less than 25 pips between the previous day's high and the quarter level and the low that was put in place in the beginning of the session. So this trade can fail at this level. So two things you want to consider is how far away is 25 pips from this breakout, and then also when the reversal occurs, if we were to short this, and again I'll give this trader a poor entry, we'll take an entry somewhere below instead of entering in up high in this retest into the peak formation. Okay, we have volume trapped with a higher low. We're going to get filled somewhere underneath of the previous day's high. We'll call it on the engulfment candle here at 34. We're going to stay in this trade. It goes to break even on the second hit of that swing low. We're filled at 34. That market should have gone vertical. Remember our whole thesis with the pump and dump. Trapped volume, this should go vertically back down. The market has gone into consolidation, and we are now approaching a time expiry. We've been in this trade for 1 hour but before this market blows off. We'll take a poor quality exit, and we'll say that this trade, we're at break even. It's moved 15 pips, 10 to 15 pips. We'll exit this trade with 7 pips of profit. So the market, say we got out at 27, our fill was at 34, we will take a 7 pip profit on that trade. Obviously it went further, but we're going to give this trader a poor entry and a poor exit, and he has a +7 on this trade. So another pair, and again I'm walking through all the pairs where this is triggered. So we're going to see how this played out if traders just executed this one trade setup on whatever pair triggered the previous day's high. We see this trigger on Japanese yen. Bring up our 12 candle window. We can see that this occurred towards the end of the London equity hour. Traders, we have our double top formation. The retest again will give this trader a poor quality entry, because I don't want people saying, oh, you cherry picked. We're walking through every single pair. So this market, the trader would have been filled roughly around 87, 86. We have a 25 pip target, which would take us out at 61 and a time expiry. This market went down as low as 69. Now the market, as soon as this pulls back, we're already at break even. Once this market has come back up in here and starts to go sideways, again, the trader will either be stopped out at break even or they close the trade. Now this trade, again, with the pump and dump scenario, this should go vertically down. A smart trader would have exited the trade on any pullback. We will give this trader a break even trade on this, because we know they like to hold on to trades in hopes that they will continue, so we will stop this trader out at break even. When we come to our pound yen, it triggered the previous high of day, and again we bring up our 12 candle window. We can see that the market went vertical in the beginning of the year obsession, another example of a trending move, but this market proceeded to break through and put in a triple top. And again, we'll give this trader the poor quality trade. They were looking for the trade. We'll even trade it on this engulfment candle. This trader entered into this trade at 27. So again, obviously the smart trader would have looked for a better entry up top above the previous day's high. We have our anchor point, a minimum anchor point target that this market should trade back to. So again, a good pump and dump will come all the way back down. But again, this is an example of a potential breakout trade, as opposed to a vertical trade that goes and triggers and hits the previous day's high for the pump and dump reversal. But again, we're going to hit these trades and we're going to see how they play out. Market trader takes this trade. They're filled at 27. Again, the market makes a low and takes out the swing low. We go to break even. The market comes back up, and again, we will stop this trader out at break even. We're not even going to wonder if it missed it by a pip. We're just going to assume this trader was stopped out at break even. The NASDAQ broke through the previous day's high, and we can see that When it got up there, it broke. First of all, it broke a high on the London Open, and then it proceeded to go back up. So again, looking at our reversal patterns, this pin to the high is not a trade. We need the market to go up there and give us our reversal setup. It comes back up in the London hour and gives us a 3-push pattern engulfment, a retest, and it stays up there. So again, if we give our very cautious and safely performing trader who waits for all of its, confirmation, we could give this trader an entry anywhere over here above the quarter level, somewhere up in the 78 area, and obviously this trader got their 25 pips. We'll close that trade out with a 25 pip profit target. Again, 15 to 20 pips max stop. This market rolled over. None of these trades that we've taken have been stopped out with a stop loss yet. We've had break evens, and this trade is an example of a 25 pip move. Obviously, NASDAQ, as I talked about, these trades have more volatility potential, but for the sake of this exercise, we're going to close it out on a fixed profit target with a 25 pip locked in profit. Our next candidate is gold. So again, we see that the market has broken through the previous day's high. And in our timing window, again, all these are in our timing window. We're looking for our 1 hour trade. We're not even going to, I know there's other trades here, but we're purely looking at the previous day's high of day pump and dump scenario. I know there's a low of day trade here. We're not even considering that. We're looking for our pump and dump setup. We've defined our rules. We're going to look purely for those reversal patterns after the previous day's high or low is broken. We have our anchor point. So again, emphasizing looking for where a vertical move begins where they go to break it. They continue to bring this market up, 3 pushes into the high, and then our engulfment. Again, will give this trader a poor quality entry. We'll take the bear pin hammer after it's engulfed on the 3rd push. We'll give this trader a 00 fill. Again, our max stop on this pair would be 20 pips, although it didn't need to be, but we'll take a 20 pip stop loss, and this pair obviously hit its 25 pip target. This is another example of where this trade had the potential of 75 to 100 pips, which if you've traded gold, I know that many traders know this, and they've been trading that, but we'll take a poor quality entry and a small profit target. We hit our 25 pip target. So again, if we look at where we're at so far on Tuesday, there's been plenty of opportunities. I know the traders are going to say, why didn't you go long? Why didn't you do this? We're just looking at this one particular setup to demonstrate, number one, how many opportunities presented. Number two, even with poor quality entries, exits, whatever, if we manage our risk and we have a fixed profit target, how could we have performed this week just on one particular setup? Simple, we can set alerts. It's all time expiry. We have 1 hour on the screen. We're not forecasting what all these other trends and time frames are. We're just looking for setups. On Wednesday, we had our pound yen trigger in Asia. And again, if we go to our 12 candle window, we can take a look at this. And again, this is to demonstrate a couple of things. Number one, not everybody's going to be available for, Asia, London, New York. They might only be available for certain trades, certain sessions. You may have limited time, but again, even with a market that's gone up and triggered the previous day's high, okay, and again, this is this line right here, the previous day's high. They've gone up. We're gonna take the devil's advocate here, and we're gonna say that this trader shorted this market right here on this bear candle because they thought this was a 3-push pattern. So again, understanding and recognizing we had our anchor point. They thought, okay, there's our anchor point. They've ramped up the volume. They're trading into 00s, all that stuff. We're not even going to talk about why or how or what. We're going to say this trader took this trade and they got stopped out. We said our maximum stop loss on the major pairs was 15 pips. So we're going to call this a loss. Now, obviously, this is a breakout trade that eventually culminated with a reversal that could have been shorted on the large engulfment cleanly. We have a 3-push pattern at the high, but we're not even going to go there because I know there'll be traders out there saying, oh, this is all hindsight. So we're going to say this trader got stopped out with a 15 pip loss. Well, we can see from our euro yen a very similar setup occurred, and we will say that this trader executed this trade at the previous day's high on the large engulfment candle. So again, just giving them the poorest fill. Some traders would have been willing to short this up here on the 3 pushes. We had trap volume. We have an anchor point where this pump and dump began. So again, go back and watch the first part of this video. What's a really good pump and dump look like? And so this is where your refinement of skill will come in over time, of actually recognizing what a decent pump and dump looks like. But for the sake of this exercise, I'm just purely demonstrating what we would do if we just followed some simple rules. This trader obviously got their 25 pips, so they were stopped out for 15 on the pound yen. They might have only taken, they thought the pound yen was a better setup. But we're going to hit every trade and then see what the opportunity, how many opportunities were there, and how these traders fared over the week. And we get to Thursday and we see that the euro gave us an alert into our U.S. session, barely getting to the previous day's high. Now, again, this would be an example. If it was earlier in the day, there probably wouldn't be a setup, except this is our third session of the day, and the market gives us our M pattern, our double top, in our U.S. session at the high of the day after triggering our alert. So we get an alert come off. We're looking for a reversal pattern. We have our M. This trader shorts this trade. They're filled at 27. They obviously got their 25 pips. So important. I'm not going to go through every little nuance of this because I want you to go back and look at your charts and understand how the importance, again, of building your playbook with setups. We have an anchor point. We have volume that chases the move. As these time frames close, you get 15-minute traders going long. You may have 30-minute traders going long, 5-minute traders going long, 1-minute traders going long, and then the vertical move. This is a great example of a pump and dump. I know many traders are nailing these on gold, but this is textbook. This is a setup. I have no idea which direction the euro is going. I have no idea what. No, and we talked about this. I haven't even looked at the news calendar. I'm just purely looking at setups. We're not even talking about eliminating out other variables or anything. We just made this really simple. We predefined our risk. We set the parameters very simply. Triggering previous day's high. We're looking for double tops, triple tops, engulfments, pin hammers, V-tops, 3-push patterns, whatever they are. In our timing window, we have a fixed stop, we have a fixed profit target, we have a time decay for exiting the trade, we have break-even trade management, and that's it. Now we come to the euro-yen again, and we can see that the previous day's high was triggered. Now this is a great example. We'll go into these later, but they've hit the previous day's low. This triggers breakout traders, shorts, hit stops, blah, all those things, and then it goes to the other side. And guess who it's stopping out? Breakout traders, shorts that are short down low. They're trapped down low. They go back to the other side. We'll talk about this in a future video. So obviously there was an opportunity at the low of the day, which again we're talking purely today about the high of the day opportunities. And let's go look for our reversal pattern. Again, an example of where the market's gone up, and if traders shorted this, if they shorted that, thinking that that was the trade opportunity, again, they could thought this was a V-top, they might have shorted this. We'll take that trade at 40. The market has come down and come right back up. They're up their 15 pips. They've gone to break even. The market comes back up and stops them out at break even. If it didn't stop them out there at break even, they would have got stopped out here at break even. But if they were persistent when the market came back up and gave them their M pattern, obviously the smart trader had the opportunity to enter in on the M right off of the previous day's high, but we'll give our poorly executing trader the fill down low. He's cautious, he's safe, he wants to play it safe. His fill on this particular trade is at 38. The market breaks through the swing lows. We take them to break even. There's trap volume up top. We have our anchor point where this move began. We can stay with a session move like this. I would consider any level down here as an anchor point. That's where the move started for the vertical pump and dump. They've broken through this low in the session. We get 3 pushes sideways. We're out of this trade. Again, that's a reversal pattern. We talked about that in our predefined exits. We'll take a poor quality exit on this trade at 18. So the trader was filled up at 38. A 25 pip move on this pair would have brought it down to 13. This trader was stopped out with 25 pips of profit. The market went down as low as 9. They got their 25 pips. On the 7th, on Thursday, we see that gold again triggered our previous day's high of day, and it happened right at the beginning of our 12 candle window. So this, again, just visually stepping back and looking at this pattern, we can see that the market gave us our nice little vertical pump and dump pattern, just like we looked at in the first slide. And again, as this market climbs higher, I will redraw where my pin anchor is, because now that we're in a 50 to 75 pip range, of course, it can fail. Anywhere down at these quarter levels, we get one push, two push, and an M pattern will give this trader a poorly executed fill on the third push engulfment. Again, smart traders would have been looking potentially to get short somewhere up inside of this peak formation after that high is confirmed, knowing that this volume that's caught up high is trapped, but we'll give our trader, again, a poor quality fill somewhere in the nature of this 11 area. That trader needs to get down to around the 91, 85 area. This market proceeds to break down through 75. We had a 20 pip stop. Obviously they were fine. They've gone to break even down in this area. They may have been stopped out, except that we don't have a swing low broken. This is trap volume, not the swing low. Again, I'm just echoing what traders are going to ask me. We need that pin low broken. And again, with trades like this, I'm not over anxious to go to break even. I'm confident that this market is going to hit my target. Part of that's experience, part of that's knowing and understanding the pattern of this reversal setup, and knowing that they're going to go back and get traders that are in the money. We're going to give this trader his 25 pips. On Friday, our US yen triggered the previous day's high on a vertical move right at the beginning of the day. Again, coming back to our high of the week. This was the high of the week. They went up and put a peak formation in, traded back up into it, another peak formation into the peak formation, above double zeros, above the previous day's high, our triple top formation just prior to the market opening for a reversal setup. We have trap volume up high, so again recognizing a consolidation underneath the double zeros with volume all caught up high. We're going to give this trader a poor quality entry. We're going to give him chasing the move. He wasn't sure about shorting it up top, so we waited for confirmation and confluence. We'll give him a 15 pip stop. We'll give him a fill at double zeros. We'll call that a double zero trade. He got his 25 pips. Previous day's high was hit. We had a vertical move. We have a triple top. We have our engulfment. We're even giving him a poor quality fill. He still got his 25, or she got his 25 pips. Okay, our pound yen gave a similar trigger to the US yen, and again just recognizing the whole pump and dump pattern. Just like we looked at in the first slide, we have where the vertical move began. They go straight up and hit the previous day's high. We have a half Batman, triple top, engulfment. Put our timing window on here in a second so you can see the trap volume up high. Right into the beginning of our US session, our Asian session, we have our vertical move with border flow going vertical. We'll give our trader, again, a poor quality fill. We'll say that this trader got filled on the big candle. They were excited, they were nervous, they didn't want to miss out. They shorted it at 05. This market pulled back as high as 16. So again, our 15 pip stop loss protected us. Smart traders would have been looking to short it anywhere up top on the near the numbers, on the engulfment, whatever that may be. Our nervous trader got filled at 05. They've put a 25 pip target in. They've obviously hit their 25 pip target. So again, recognizing the better you get at these setups and you see the scenario playing out, smart traders are getting a fill, they're adding, and they're holding on and squeezing this right out, taking money off, holding and squeezing and getting out, hopefully with the maximum amount of profit. But our trader got their 25 pips on the pound yen. On Friday, the NASDAQ triggered the previous day's high. We bring our timing window up. We take a look. We can see that this market traded up later in the London hour, triggered the previous day's high, engulfed, came down and retested that trigger, gave us our M formation. Again, we can call that our anchor point where they went vertical. Again, it's just looking for where the move started the pump and dump scenario. We have ramped up volume. We have our M formation. We'll give our trader a poor quality fill again because they are nervous and they're not sure and they're uncertain, and in lifetime they struggle to feel confident to execute this, but they're getting better. But we'll give them a fill on this bear candle, the big bear candle. Again, a smart trader would have been looking to maybe short up in this area, recognizing this failure pattern. They would have shorted it maybe on that first leg, definitely shorted it on the second leg, been adding into this, possibly even added in on the vertical move down, and then again been scaling out, taking profits, holding on with a trailer, possibly down to 50 major round numbers. So our quarter level will give this trader our fill in the area of 618. So again, somewhere below, we're going to take the devil's advocate, poor quality fills 18. They obviously got their 25 pips. Gold also gave us a high of day trigger, previous high of day trigger on Friday. Go to our timing window. Happened right at the beginning of our U.S. session. So again, I know traders are going to say, why wouldn't you go long or anything else? We're just purely talking about the pump and dump reversal setup off the previous day's high. Just this one setup, what the potential was of just one setup, and how much in terms of frequency that was offered to us this week. So again, we can look at where this move began. We can call the beginning of the session the start of the pump and dump. So we got our pin hammer. They brought it up 50 pips, and yes, you could have traded this long 50 pips, but again, we're talking about the reversal. We're using parameters that we defined every single parameter today. Again, we have our trigger, we have our reversal pattern, we have our timing window, we have our entry in terms of engulfment pin hammer. After the reversal pattern, we have a controlled max stop loss, we have a fixed profit target, and we have a time decay for exiting the trade, and we have a break-even trade management process that we defined. So again, smart traders would have been looking to short this first engulfment, recognizing that this trigger, this high of day trigger, has happened and no news on the calendar. We have our engulfment. Again, we have a super cautious trader. We're going to give them the entry on the third engulfment, triple top. Obviously, there's an peak formation, an M, and a third formation engulfment. We'll give them the poor quality fill. You know what? In this case, let's even give them the reversal pin hammer fill to see how they perform. We have a 20 pip stop. They're filled at 43. They obviously got their 25 pips. On Friday, this Canadian dollar gave a great trade. Now, we're going to walk back through and just talk about this for one extra second, because if you notice, this is Monday. Monday, no previous high of day is hit. We have a Monday, Tuesday peak formation low, no high of day is hit. It is hit on Wednesday. But notice again the difference between a pump and dump versus a possible continuation consolidation move. No vertical peak formation accumulation distribution pattern. This is a sideways rectangle. We had news on Friday, major news. We had Canadian unemployment. So again, I've talked about in other videos using the calendar. We saw RBA go vertical on Tuesday and they rolled over on Thursday, Friday. Low-hanging fruit trades all the way down, but the Canadian dollar, they ramped it up and held it in a trend until we got to Friday. So we have a Wednesday midweek consolidation for a continuation move. Again, the same scenario on Thursday. So just because a previous high of day is broken, understand where you're at in the weekly template. This is a trending market. We have a consolidation. There's no pump and dump here. These little swings back and forth are not pump and dump, although you can see there is a pump and dump scenario within this rectangle. But when we see consolidation, I'm not looking to trade this. We defined our parameters early in this video. We are looking for the vertical pump up to the previous high of day. Take a look at Friday. What do we get into the U.S. session? We get a vertical pump and dump scenario with a triple top. Again, for traders in the Northern Hemisphere, we see the space, the vertical move. So we have our anchor point from where the move began. We have a vertical move into the previous day's high. We have trap volume up high. We get our M pattern, our 3 pushes, even if traders shorted it early and they were caught inside of this. They were either stopped out at break even or they held it with their 15 pip stop, which we defined. Traders were not stopped out. We get our engulfment on the final shoulder in the 3rd hour. So we'll zoom in on this. Our patient trader got filled somewhere in the nature over on the far end here. We'll blow this up. If I can get this right. Somewhere in this area, anywhere in the nature of 2605, 2606 above double zeros. They obviously got their 25 pips. This trade played out slowly, but it surely enough hit their 25 pips. If traders took this trade early and they went to break even, they may have been stopped out, but they were given a re-entry with no heat on their original trade. This did not go 15 pips close to their stop. We're going to give this trader their 25 pips. So when we look at our final tally for the week, obviously there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 trade opportunities between the majors, the pound and euro yen crosses, oil, gold, and NASDAQ. And again, I may have missed a couple, but I've skimmed through all these pairs. We clearly defined our parameters for these trades. The end of the week, there was plenty of opportunities just on this one particular trade setup. That's just one trade setup. 332 pips of profit. We saw that this could have been more on certain trades, obviously. We took poorly executed trades. We took, stop outs and break evens on trades. We had a 15 pip losing trade. So that's one setup. We walked through every single pair. We looked for one simple criteria. My point and my emphasis in this video is build your playbook and keep it as simple as possible. Tomorrow, Tuesday, Wednesday, Thursday, Friday, you are going to see this exact same setup show up again next week. There might only be half as many trades. There could still be 100 pips of profit. Scalable, again, managed our risk. Everything was controlled. Very, very simple and reproducible over and over again. It's as complicated and as hard as you want to make it. So hopefully you got value from today's video, traders. What would happen if you mastered a couple of simple setups and then really got methodical and extremely skilled at trading those? Enjoy the rest of your weekend. Keep it simple. Master your trading process, and may the markets.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.